Hello everybody. So in this video I am gonna make the point that MicroStrategy is essentially calling the dollar bluff and is acting as a better magnet for capital than Bitcoin itself. In many ways, MicroStrategy is a magnet for capital that is perhaps 10 years ahead of its time, because it's an equity, it issues bonds, it issues equity. It is understood by the current financial system as it is set up, and it talks to both the market for equities and to the market for bonds, which is something that Bitcoin may be suited for perhaps 10 years from now, but not as of today, right? The day Bitcoin is added to an index fund is no time soon, no time ever. Perhaps, but MicroStrategy, on the other hand, will be added to index fund, will act as a gateway to Bitcoin, to traditional finance. But the dollar, why is it a bluff? Why do I call it a bluff? Well, this is partially what this video is all about. So let's get started. What is money? Where does money come from? Well, used to be gold a long time ago, but as that hasn't been the case since the Medicis, if you talk about double entry accounting, and since the Roosevelt/Nixon combination of acts, if you talk about the United States. Today, what is the dollar? Today, the dollar is mostly something that is created by commercial banks. A significant amount of dollars is also created by the central bank itself. And when the central bank creates dollars, what they do is they buy usually things like government bonds, but also mortgage-backed securities to quote-unquote support the economy. This was the famous 2020 60 Minutes interview of Jay Powell, where he pretty much explains we print it digitally as a central bank. We have the ability to create money digitally. When they create that money digitally, they put it into their ledger, and what do? They buy government bonds, they buy mortgage securities. Some central banks even buy ETFs, believe it or not, and this system has been going on for a while. As Henry Ford used to say, it's a good thing that the people of the nation do not understand the banking and monetary system, for if they did, I believe there would be a revolution before tomorrow morning. Bitcoin is that slow, healthy revolution with a major dose of skepticism, which is perhaps the only reason why it can happen. If it was happening overnight, you would never have that revolution. At the pace we're going with Bitcoin, this will take maybe 2 generations, maybe more than 2 generations, and we're halfway through 1 generation. This will take a long time to have Bitcoin kind of create that new hard asset that people move to, an hard asset that is not based on trust, but that is based on verification, where we know exactly how many coins there are, how much money there is. So how is money created? Again, this is important to understand. Money is created for the borrower. When you borrow money, the money is created. There's 2 entries that make it onto a ledger at the commercial bank. This is an artifact from double entry accounting. Medicis, 1500s, Italy. What happens when you borrow money? You're credited $1,000, and in exchange to that, a debt is created. That is your debt, your promise to repay that $1,000 to the bank. When you repay that $1,000 to the bank, theoretically, the money disappears. You destroy that money. Money creation happens when you borrow money. Money destruction happens when you repay the money. That is minus the interest of the bank, which the bank gets to keep, and that is the bank's profit. And of course, the interest is composed of both margin and risk, the risk that you would not repay, in which case the bank would incur a full loss. So theoretically, you create 1,000, you delete 1,000, 5 years later when you pay it off. Theoretically, this shouldn't have an impact on inflation, right? Well, let's ask this question. Do people, do companies, do countries ever repay their debts? If they did, that would greatly limit inflation, wouldn't it? You would just only have the defaults, pretty much, that would create inflation. What's the answer to that? No, they don't. They don't repay the debt. The debt piles up. New debts repay old debt. This grows monetary mass. The corporations have a fun way to name it. They say the debt matures and we have to roll it over. We roll over the debt. We issue a new bond to pay the old bond. This is what MicroStrategy did 3 days ago when they announced their earnings, right? They repaid an old $500 million and they issued a new bond. They roll it over. So do the governments. When the governments issue debt, it pays the old debt, and the governments always run a deficit that way. That's point number one. So the amount of money is limited by how much trust you're willing to give counterparties in the system. That's what limits the amount of money. But you may say, well, what if I trust everybody? Can I lend as much money as I want if I were to trust anybody? And unfortunately, the answer to that question is yes, because ever since 2020, there is a 0% requirement, 0% reserve requirement, which means that you can pretty much lend as much as you want. Back in the day, there used to be a 3% requirement, which means that for a $100 deposit, you can only lend 900. I mean, talk about, and anyways, they could always recycle it, and 9 would turn into 27 and so on. So that reserve requirement has always been a joke in the first place. But the answer to that question is that there's essentially no limit. It's as much as the bank is willing to risk. And what do you think happens as a consequence of that? What happens to the money stock if the debts that were issued never get repaid, if the debt that was written onto the ledger never gets deleted on the ledger, or if it gets deleted, it's only in counterparty of new debt written elsewhere on the ledger? What do you think happens? Well, this is what we all know too well. The government is the example people usually take about the money stock and the rise in the money stock. The US has $35 trillion in debt, which means that on the other hand, money was created, right? That social security, the salary of government workers, the purchases of the government. The government is the largest corporate buyer in the world. There's no bigger buyer than the government. All of that spend, right, that is spent by the US government, well, it corresponds to a debt, and that debt is now 35 trillion. That debt is through the roof. You spend money, that's one entry on the ledger. You have the debt on the other entry of the ledger. A little less known, of course, is that companies do that all the time. This is why I would be scared. I mean, no financial advice, but me, I don't touch the S&P 500. I am scared by the S&P 500 when I look at the liabilities of some of these companies. Some of these companies are run just like the government. This is an example, just a random one. I was going to use AT&T, but that would be unfair. So I'm going to use another company that has a bunch of debt. I'm going to use Verizon, right? A close second to AT&T. Well, Verizon has a nifty $283 billion worth of debt. $283 billion worth of debt. Unfortunately, my chart here only goes back to 2009, but you can see, the debt matures, boom, you refinance. Oh, the debt matures, boom, you refinance. The debt is just rolled over, and that is the only way you can explain how such a company has so much liabilities. Of course, a cell phone company, right? A phone company, a smartphone company that you use to communicate with your friends, with the US. Of course, that cannot be disrupted, right? That cannot be disrupted. Satellite phone service is never ever going to be a thing, right? SpaceX's Starlink is a total failure, right? Of course. So the $283 billion here that were created based on trust that the business is not going to have disruption, that's going to be repaid, right? That's going to be repaid, of course. So we don't have to worry about corporate debt, right? Except That is not how it works. And when these nations, I was being joking here. I was joking here. When these corporations fail, these nations fail, these cities fail. I remember the city of Detroit. What do you think happens to the debt that should have been deleted? That debt is now forgiven. Bankruptcy forgives the debt. That debt is never deleted from the system. It stays in the system, and it just turns into a permanent increase in the money stock for which savers, for which companies with dollar treasuries, commercial paper, they've never been compensated for the fact that somebody, for example, defaulted on $100 billion, and that $100 billion that was created across decades was never canceled in any ledger anywhere. The debts live forever, and they only grow, and this increases the money stock. I have a final example of that, of course, and this predates this predates many of our eras. This is one of my favorite examples. It's a Dutch bond that was issued to build a dike. A region in the Netherlands was flooding, and it was 1648, and they wrote this bond in 1648, perpetual bond. This is an artifact of old finance. The interest payments on this are under $10 per year. And that bond is still being serviced. You can look it up online. It's owned by Yale University. It is still being serviced by the entity of the entity of the entity of the entity who still owns that dike in the Netherlands. It's still being serviced. Do you think there's any intention to repay the debt? No, the debt doesn't want to get repaid. This is not what people want to ever do. So the pie of money, the money stock, just grows. And like I said earlier, bankruptcies don't make it any better. That's why the bankruptcy is kind of the tragedy of the commons. Whenever there's a bankruptcy, it's society that accepts to turn the debt into inflation. And when we see very old companies go bankrupt, like Sears, for example, but I can think of so many other ones, right? GM in 2008. Is that going to happen again? When you look at the S&P 500, is that going to happen again? I think it's going to happen more and more, and that debt that was created never ever gets erased from the ledger, and thus we have this money supply that always grows. So the question is, who reimburses society for the surplus in money supply that is now permanent due to the default on debt by governments, companies, and individuals, right? And some people have caught on to that. I suggest you look up the buy, borrow, die movement. Some people have caught on to that, right? When you die with debt, who cancels that ledger? Well, it's the tragedy of the commons. It's society who just said, all right, well, they lived a good life, and now whatever debt there was is now inflation. Life is good, right? And this is only based on the fact that, most people don't know. Going back to Henry Ford, most people do not understand the monetary system. This is why it works this way, and this is why we need Bitcoin. This is why Bitcoin is the idea. So let me sum up here. Everything we love, cherish, own, consume, work for, our very time, right, in life, it's all divided by money. You can quantify everything by money, right? I mean, for example, I talk about transmedics and organ transplant stock, right? What's the cost of saving a life? Well, you can look at how many hundreds of thousands that costs, but you can quantify just everything by the denominator, even the most valuable things in our life, like our time. You can quantify that by money. It's how much you want to make an hour. That's the value of your time. You perhaps don't want to be flipping burgers at McDonald's. Perhaps you'd rather be going out, having fun with your friends. Well, you can't do that. You're flipping burgers. That time that you're giving up, you're getting compensated by something that is getting diluted. something that is getting diluted and diluted and diluted. It's like having a wine. Somebody adds a bunch of water to your wine. All of a sudden, after a few minutes of dripping water drop by drop into your wine doesn't taste as good. And if you do that for a full day, you have water, you don't have wine anymore. Not as desirable. Sorry if that analogy doesn't make sense. That's one analogy. You dilute the thing. It gets diluted. It's a debt pile that just keeps growing. And because the debt equals the money, because the money is created via the debt, the growth of that debt pile also means the growth of the money. And this is because the governments, the companies, the individuals, via bankruptcy or death, depending if you're talking about a company or government, they roll over the debt until they cannot pay back that debt anymore, in which case, if they don't pay back the debt anymore, there's a bankruptcy. It's just getting picked up by society, and that is why the pie always grows. And my estimate is that the pie of that money stock is growing at 15% a year. I've heard very serious people say 14% a year. My estimate is that we're at 15 now. You have M2 money stock, which is what people talk about the most, but people often forget about what used to be called the euro-dollar system. Now it seems like we call it the dark dollar, or the dark banking system, but there's a whole banking system offshore outside of the US financial system, which may have even more dollars than there are dollars in the US. And those dollars make it back to the USA, by the way, through trade, right? When you have an Australian company keeping the books in USD at an Australian bank, for example, well, that's an example of dollar being held abroad. This is, whenever someone discusses the money stock M2, they almost never discuss euro dollars, which is another thing that, kind of ticks me a little bit. It's like, yeah, we may have an estimate of about $22 trillion within the US financial system, but nobody really knows how much there is outside of the US financial system now, and how much is there. Is it 50 trillion? I think it's roughly close to 50, perhaps more than $50 trillion out there. That's another default of a dollar, is we don't know how many there are out there. You don't know your share of the hard money. You don't know your share of the money supply that you get when you exchange dollars for work, for something you love, for a house, for food, whatever. You don't know. Bitcoin fixes this. If the world hyper Bitcoinizes, and we're talking about, probably a 2100 plus events, that's probably what we're talking about. But even if the world coexists, and for most of our lifetime, I believe we'll be in a world where the Bitcoin standard, right, the Bitcoin commodity will coexist with gold, with dollar, with Magnificent Seven type stocks, right? It will coexist, but eventually the Bitcoin will grow bigger and bigger and bigger, and perhaps, at least within our lifetime, dwarf gold, dwarf the art market, and maybe one day be as big as, say, well, maybe not the dollar currency, but I mean, at least that's that, again, that probably sounds very silly for me to say that to my viewers, but it's entirely possible that Bitcoin eventually, if you get down that rabbit hole, it's entirely possible that Bitcoin eventually, maybe when I'm an elderly man, maybe Bitcoin will be bigger than the USD. But that's the beauty of this. It doesn't need to be bigger than the USD for it to be a major story. So now that I've bored you with Bitcoin, let's get back to MicroStrategy. All right, let's finish the video. So again, going back to that denominator, this is the denominator, and we see three things in the denominator. We see the dollar. This is the ever-growing money stock, where we divide everything we love currently by the dollar. And this is Bitcoin. Bitcoin one day is on its way to dividing everything we love. That's why we say infinity divided by 21 million. Notice between the transition between the dollar, the ever-growing pie of dollar, and Bitcoin, notice that in between I have put MicroStrategy. Why have I put MicroStrategy? Because MicroStrategy, in my view, is a much better black hole currently, I'm not talking 10 years down the line, I'm talking currently, it is a better black hole than Bitcoin. I've put the Bitcoin right behind my image of a black hole. Why? Because behind MicroStrategy, you have Bitcoin hidden in the back. And so what is happening really? Well, the pie of money is growing and ever growing. And sure enough, some of that pie of money goes straight into Bitcoin, right? That is, all of the Bitcoiners, any one of us who buys Bitcoin directly, personally, that's some, if you use the Cash App and you buy a little Bitcoin, if you use Coinbase, you buy a little Bitcoin. If you do that, this is clearly a flow between that money stock to Bitcoin, and it's growing the size of Bitcoin in the marketplace. But notice how narrow my path here is. It's very narrow. Why? Because it's a very small market. What is respectively, well, it depends on how you look, but let's talk about two of the top three assets out there, right? Real estate is a different story. Of course, some of that money flows into real estate, but real estate is a different story. So let's forget about real estate. Let's forget about gold. These are also assets that should go up in line with the increase in money supply, but let's forget about those and let's just focus on equities and bonds, which are the two other very large asset class, of course. As the money supply grows and ever grows, it sticks to desirable investment assets, right? Those things where people save their economic energy. So it's going to stick to what? It's going to stick to equities and it's going to stick to bonds. As investors, we tend to think that equities are bigger than bonds, but that's not entirely true. I'll give you a simple example. Social Security only owns treasuries, U.S. treasuries. Your retirement fund, your 2055, your 2045 retirement fund at XYZ company, or any firm, whether it's a teacher retirement system, firefighter retirement system, policeman retirement system, I ask you, how many bonds do you think they own compared to equities? Let's move on to, say, banks. Let's move on to, say, insurance companies. Let's move on to, say, corporate treasuries of big tech, like the almost 100 billion at Microsoft. What do they own, right? Where is all of that money at? That money is stored in bonds. Bonds are used to store money by so many institutions. And even if, as investors, many investors prefer equities over bonds, bonds are still a bigger market because that's what so many institutions use to store their cash. It's not like the bank. It's not like the FDIC insurance at the bank can cover a $450 million account. When you think about, say, the Roku story, Roku at $450 million at Silicon Valley Bank, they could have lost that money had there not been a bailout, right? And so a lot of companies will store the money in bonds, treasury in bonds. I mean, government treasuries sometimes they'll store the money in bonds, or they'll store it in commercial paper, which are short-term bonds. That's what they'll store that money in. So that increase in money flows into slightly Bitcoin, but much more into equities and much more into bonds. And what happens when the money flows into equities, for example? Well, what is the most popular investment instrument to invest in equities by the people? It's the ETFs. It's the QQQ. It's perhaps one day the S&P 500. It's the total stock market funds. All of your mutual fund, all of your ETFs, they flow into these index funds, and these index funds end up buying a basket of stock. What stock is in many of these different baskets of stocks? MicroStrategy. And if MicroStrategy keeps trading this high, come the last trading day of November 2024, it will be added to the QQQ, which is one of the largest indices out there, which means many funds, much of that increase in money supply that makes it to equities will make it to MicroStrategy, which is the front door by which this capital from the money increase makes it to Bitcoin. So it's money increase mediated by equities, mediated by MicroStrategy into Bitcoin. So that is why I use the black hole analogy. That is just one black hole. And of course, Michael Saylor used another black hole in the form of convertibles. These bonds, these bond funds, these hedge funds, these insurance companies, they like bonds because bonds are understood and bonds have downside protection. There is a principle that you get back in a nominal dollar amount, and so within their mandate, that is all they can buy, and the bond market is bigger than the equity market. So MicroStrategy is able to sell convertible bonds to the bond funds, to the bond holders, to the bond hedge funds. And so the bonds flow into Bitcoin via the gateway of MicroStrategy. MicroStrategy engineered a way for the bonds to enter the Bitcoin market. I find this absolutely genius. And that little arrow here is also the fact that you have a few equities that invest in Bitcoin directly. Tesla is one of them. MicroStrategy, obviously, is the elephant in the room, but you have Semler Scientific. You have a few other companies, stock, publicly traded companies that invest in Bitcoin, but many of them are much more comfortable buying bonds with their treasuries because, again, you can't really have 500 million at the bank. If a bank goes bankrupt, it's too risky. Well, some of these equities, some of these companies, these stocks, they may also very well be interested in buying the convertible debts of MicroStrategy. So the equities buy the bonds, the extra money supply buys the bonds, and in this basket of bonds, MicroStrategy has a plan to be an asset that is popular in addition to the common stock. And so that's why it's a black hole, it's a gateway, it's a neat, beautiful way for the increase in money supply, that debt that never ever gets repaid, that money stock that always grows. It's a path, it's a way for it to flow into equities and bonds, which then flow into MicroStrategy, which then flow into Bitcoin. And the more expensive Bitcoin gets, the more expensive MicroStrategy gets. The more expensive MicroStrategy gets, the more it can issue bonds. The higher of a share it gets in the indices, and you create a virtuous cycle all over again. And so that's a black hole that attracts TradFi into the hard money proposition that is Bitcoin. And so this was not financial advice. This is not investment advice, just entertainment. Hoping you were entertained. Please like, please subscribe. Thank you for watching and have a wonderful day.